Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Hello everyone, welcome back to Broker Daily Uncut. Your host Jack Campbell joining you on a lovely sunny Monday morning, I should say. If you tuned in last week, you'll know that we have a bit of a shake-up coming to the show. No more Phil Tarrant. I still have Alex here with me, ready to jump into the news that's been cracking on this week. But we also have a new expert come in, so we'll be able to provide a bit of insights on the broker front. We have Eva Loisance, who is the principal at Finni Mortgages, who will be joining us for the coming weeks. Eva, welcome. Great to have
thank you. Great to be here. I'm very happy to share a bit more of the, news we see done during mortgages.
Yeah, it's good to get. I think we blunder about, with the best intentions, myself and Phil and Jack. But I think having insights at the coalface is valuable. And say you're up for an award coming up fairly soon. Is that correct? Did I read correctly?
Yeah, Principal of the Year.
Principal of the Year, very good. When's that? Is that in the Women in Finance?
Yeah, Women in Finance, and I think it's in November.
Okay. Yeah, very
exciting.
Good.
Very exciting.
Yeah.
Well, it's as Alex said, it's good to have an actual broker on here because we're pretty
an actual real one.
Yeah, we're pretty engaged with the industry, but we're not doing the day-to-day work that is involved with a broker. And you're coming on an exciting time because last week, if you were catching up with the news, you would have seen an article we did surrounding AI and BDMs and whether AI will affect the BDM proposition, especially at the major banks. And I spoke to Julian Fayard at Loan Options AI, who is very engaged with the industry, and he had a few honest things to say sort of around the BDMs that I suppose aren't there for brokers to support them. And he said there is a world where AI could take their jobs, as with any job in any industry, and BDMs were quick to hound him and vilify him.
This originally was off a broader piece from memory around AI and lenders, was it? So the evolution of lenders, and then how that's going to manifest itself potentially in third party. Is that right?
Yes.
Is that the sort of origins of it?
Yeah, 100%. So if you kept up with the headlines this year, you've seen job cuts at the major banks almost weekly, and it seems like most of the job cuts were with AI, the push to AI at the major banks, and then on top of that, a lot of them were customer service roles. And I figured BDMs are a big part of their role is customer service. So I did some digging. The major banks weren't keen to comment on it. I got one back from CBA, but they were the only ones that responded to me.
What did they say?
They couldn't give me the response in time for the time I put the article out. But so seems they were reluctant to talk about it. But now we have the broker on the show, Eva. I'd love to know your perspective, what you think AI and the impact.
Yeah, I think it's for every job as brokers as well, is when it's very simple answer, yes, maybe AI can replace a BDM. As we deal with more complex lending, difficult situation, time-sensitive situation, BDM, I call BDM every day. So if I had to talk to a robot to fix some of the issues, I'd be feeling very uncomfortable to get that solid for my clients. So I guess it very much depends on what problem you have. And it's like every industry, some BDMs are amazing, some BDM not so amazing. It's everywhere.
From my memory, looking at the years that we've surveyed brokers with the third-party lending report, the BDMs have a major impact on brokers in terms of which lender they choose to go. So it's a skilled and valuable job. It's and I appreciate that some BDMs are going to be better than others. That's the way it is in everything, right? But it certainly was one of the key factors going back. I haven't looked at the report for a little while, but certainly historically that would be an influencing factor as to where brokers would put their customers. And again, one of the reasons why we launched this report in the first place was to highlight the lack of impact on commissions. Brokers are not driven by commission, they're driven by outcomes for their customers. So BDMs play a key role. Where do you think, there could be any, enhancements in terms of tech that could maybe ease the burden for
I think
BDMs?
for simple, let's say, policy check, where it's I can't remember if CBA or NZ or whoever does this, instead of picking up the phone or trying to find it yourself, you could just type the question somewhere in a chat GPT thing and you get the answer quite quickly for something very simple. I think as soon as it gets a bit tricky outside of the black and white question or exception on policies, then you need someone to be like, I think credit would accept that, or credit would reject that, or often we call for escalation as well when something is very pressing. You need to settle by this time. Well, a robot is not going to get up, go and talk to somebody in his office. And so look, yes, it could replace job and could replace brokers and financial planners and what have you for I think what's simple. For the rest, I'm glad they're still around.
I think that was the general consensus with the people I spoke to. They said a lot of the smaller deals, AI could definitely enhance that, but the trickier ones, obviously, you're going to need someone to hold your hand through it sometimes. But responsiveness, again, was what other brokers were saying as well, because if you have a deal and a BDM's taking a few days to get back to you, that deal's gone at that point, right?
Correct.
But, you know, is it getting stuck with the BDM or is it getting stuck with somebody else? You know, the BDMs, I would imagine, is largely kind of the messenger, you know? If it's stuck with credit.
Yep. It depends if it's true at the beginning of do I put the loan there or there? You know, the way I see it is if you don't reply to me within 24 hours, you're not interested in that in that deal, I go somewhere else. So, but if it's already with the bank and we need action, then it's difficult if someone takes 3 days to... What do we tell our client? Like, we look bad, so I'm not gonna...
Of course,
I'm not gonna deal with that.
Yeah, well, it's definitely a divisive topic, but BDMs, if you want to have your say, you can reach out to me, editor at Broker Daily. Would love to hear what you have to say. We'll just throw to a quick break. We'll be back into more content just after this. And we're back with Broker Daily Uncut. There was also in the news last week, Great Southern Bank launched a 40-year mortgage, which is monstrous. 40 years is a long time. And I wanted to hear from you, Eva, specifically, what do you think the opportunities and challenges are of a 40-year loan? Because it's
not new. It's not new. Some other banks are doing that. I think it's a great way, the way I see it, as an opportunity for people that would be really stretched on the 30 years term and that couldn't afford to actually go ahead. I think the ideal would be, though, that they don't stick with a 40 years repayment plan and make extra repayment, get rid of it. 40 years is a long time.
But
like
nobody has a 40-year loan. No one has a 20-year loan. You know, you tend to... The life of the average loan is, 4 or 5 years?
Yeah.
Is the reality.
Correct. But people would pay their property within sometimes 30 years, sometimes more if they keep refinancing. The opportunity I see is, I don't know if they would do it for investors at this particular bank, but it's for investors that are actually tight on servicing to take that mortgage anyway for 40 years and just, refinance, sell the property or whatever. So it gives people borrowing capacity that they may not have had with a 20, 30 years loan. So it's not the first bank doing that. No. We've got others. Yeah, it's not
the Americans love a long, they'll love a 40 and a 50-year loan, don't they?
Yeah.
But it basically just reduces the principal payments. You know,
every month. That's it. It gives you a bit more borrowing capacity, a bit of breathing.
It's almost like an interest-only loan, but still under the banner of a P&I.
Yeah, breathing space. I think it's great. You don't want to be that person, though, that keeps that on for 40 years and get a home at 30 and at 70, like, here's my last repayment.
Yeah. So you'd expect if you had a client come to you, they wanted to engage with a 40-year loan, it's just a foot in the door and you'd expect them to refinance.
Foot in the door, just pay more every month. There's so many buffers in servicing. So people think, okay, well, I only have $2,000 left at the end of the month to put towards my mortgage. If you don't take all those buffers, maybe 2.5, they can make more. They could actually have a mortgage paid in 20 years. It's just, it's so much built in that, So that's a great way to increase what people can do.
Is there a higher demand for it, for these longer loans, now that you got, cost of living challenges, property prices are pretty inflated? Are there more banks coming out with policies like this nowadays?
Yeah, I think depending what their servicing was like, having a 30-year mortgage with a 30-year lender might be like having a 40 years mortgage with a major bank, depending on the servicing threshold. So people would, I think, be best redirecting their mortgage to a second or third year lender instead of taking 40 years mortgages, just in case they end up being that person that never refinance and just keep growing, which happens.
Yeah.
I've refinanced people that have had the same mortgage like for 20 years on like 10% when it was 2% for everyone else. It's like, how?
So a lesson of brokers to be engaging with your clients and helping them refinance.
Move it. Yeah. So that would be very clear with my client that, you're not going to be there for 40 years.
Yeah.
It's just a foot in the door.
But that's the thing, though. You kind of once you've got to keep an eye on, or I say keep an eye on your customers' loans. You don't always know how that interest rate has changed from when they first came in. So it's not really the brokers. It's not like they've got sort of clear vision of where rates are.
We try to review things every 6 months, but they're
so
also
that's doing your mortgage health check.
Yeah, the people that just go, missing as well. They don't reply. They're just like, whatever, I got my mortgage and they've changed job and actually they can't refund, whatever it might be. So it's not always easy to help people.
Yeah.
They want to be, you need them to want that help.
Well, it's great to see that lenders are experimenting and providing more choice for consumers, because choice is always a positive thing. We'll just throw for another break. We'll be back into more content just after this. And we're back with Broker Daily Uncut. Eva, you guys over at Finni, you've got a bit of a niche proposition, right, that you've honed in on. What was that? Is that investors that you guys are focused on?
Investors, complex lending, SMSF, trust, and really people trying to build wealth through properties.
Was that something that you guys sort of fell into, or was that something you've honed in on because of the demand that's rising?
A bit of both. I think when I joined Finni, I guess the company was created by people that are investors and care for that. And that's what I care for as well. So I think it was like a natural progression, I want to say.
Yeah.
And then there's a huge demand for that because brokers aren't really specializing in complex stuff. So it's easier to do a first-time buyer.
It's a funny place to operate because you're doing complex work, a lot of hours on deals, but often you can deal with some quite small loan sizes, which is it's a challenging area to work because it's not about number of hours on file. It's about the size of the loan you ultimately get paid. So
yeah, correct.
But there's a big gap in terms of knowledge from brokers that can do the stuff that you and your team do.
Yeah, that's true. And we struggle sometimes to get people in the team because they just don't know how to structure files, how to check capacity, how to think outside of the box to make something work. Those 40 years term. Sometimes that's a solution to get in.
So
not everybody would think about that. Yeah,
a bit of risk and reward involved with operating in that space. Yeah, well, it speaks to, we were talking about the other week, the rise of people sort of branching out from residential investment and going into commercial because it's a bit less risky at the moment from what we've seen. Is that something that you're noticing as well? Yeah,
for sure. I think from the client's perspective, it seems to be high yield, high growth, like a good deal to go into commercial. But also they come because they're maxed out in terms of residential borrowing capacity, and they seem to think, I guess the word out there is that it's so much easier to get a commercial loan. There's less compliance, there's less, bits and bobs that you need to get, less checks. So I think they turn towards that for ease of transaction. Yeah.
So you do SMSF. What trends are you seeing through your SMSF customers?
It's commercial as well.
Mainly commercial or
a bit
resi or a bit of both?
Half, but we still have clients that may have had, let's say, 2 or 3 residential property. They're sort of stuck, servicing is a bit tight, and it gets just too hard. And they're like, well, you know what, doing my research, my next property will be a commercial one because then I have high yield, high growth, I put in a trust and it sort of give them a boost into what they can do next.
And I know you specialise in investment. You've got your brokerage got quite a large footprint, quite a large client base. Are you getting much sort of straightforward, sort of first-time buyers or just owner-occupier type stuff coming through?
Yeah, we do, but it's more of a second win thing. Like someone, we would have done the investment and like, oh, my son is buying their first property or my neighbor's buying their own. Could you do that? So I'm like, yeah, sure, that's easy. Let's go for that.
So there's obviously the bump in with the interest rate cuts or the bump in the first time buyer incentives. You can see it in the auction clearance rates that things are moving. I know that it's not all on fire yet, but there's certainly those indicators. Are you seeing the same from investors, and are you seeing any particular trends with investors? Yes,
so we do see investors coming back. Let's say, again, they had a few properties or they bought a property last year, coming back to check, okay, well, the rates have gone down. Maybe I've got a bit more capacity. Maybe I've got a bit of equity I can extract. Can I please get a pre-approval to get ready for that next wave of growth coming up. We definitely see that.
Well, you're a residential investor, Alex.
Yeah.
Would you ever consider branching out, going into commercial?
The next property that I buy will be commercial. In fact, I've started selling off because I've got a self-managed super, which I kind of like close my eyes and stick a pin in the ASX and invest in whatever grabs my attention. I've managed to do reasonably well doing that, but my share investment strategies are pretty bad. It's like playing the pokies. So the money that I've managed to get together there, I'm now selling off
to buy commercial.
My shares to buy commercial.
So what's your reasoning for commercial then?
Because of the yield. Because I think I've got lots of resi in my trusts, and I'm done with resi. I think largely I'm quite happy with where my resi portfolio is. But looking at commercial, looking at buying yield. And I talked to Phil. Phil's bought commercial in his SMSF, and he's been pretty happy with the way that's gone. So that's the way I will go. I've got to just sell my shares off first.
And when you say commercial, are you thinking like a industrial factory or something like that?
I honestly, I would talk to. We've obviously got good contacts through the broader media group with commercial buyers agents. So I would, as always, with every purchase that I make, I use an excellent buyer's agent. So I'll get a recommendation for the right buyer's agent for commercial, and then I'll have a look. So I have no real idea about commercial apart from the fact that I know broadly that it's a good yield and also good growth. So I'll look at some recommendations from either from Finni, or from Phil. Phil's pretty well connected, and then I'll see what we can get.
There you go, Eva. You got another deal coming in.
You see, that's actually quite typical of what we see.
Yeah.
Yeah. So.
Yeah, well, it's interesting. It's good to keep on top of the shifting nature of investors, and something we'll definitely look at more in this podcast as the weeks go on. But that's all we have time for today. But Eva, you'll be back next week for round two.
We've upgraded, haven't we, really? We've managed to say goodbye to Phil. I've got the voice of reason here.
Don't tell him that. He'll be upset. And thanks to everyone else for listening to this episode. If you want to see more content, visit brokerdaily.au. If you want to reach me directly and chat about anything that we've chatted about in this episode today, that's editor@brokerdaily.au. Chat to you again next week.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.